Welcome to Daily Analysis with RFX. Today, the 30th of January 2025. So, we're going to be quickly making a recap, looking into our analysis so far, starting from Monday. So, on Monday, we make analysis on Euro USD. So, let's take a look at how our USD is playing. So, as of yesterday, price went down into our point of interest, which is at this point, and you can see that the trade has been triggered. So, and this is more like a sniper entry. You can see immediately price touches our entry point, it bounces back up. So, as currently the market is moving, yeah, Euro USD is moving towards the upside. So, even though it's a bit slow, but is making progress. So, and the next thing we did yesterday, which was the 29th of January 2025. So, we make analysis on USD JPY, and this is how our analysis is playing out. So, as for yesterday, our major entry, which was on 4 hours, which as of the time of making the analysis, it was already missed. So, we take a look, we move further to the lower time frame, which is the 15-minute time frame, where we make analysis and we spot an entry point using an FVG, that's the value fair gap, at this area, and you can see what happened here. So price bounced back, and as predicted, it went back into and immediately is touching the FVG, it bounces back down. So as you can see that this is also another sniper entry. So that's just it. Making analysis is sweet and it's easy as long as you follow the right principle. So now this trade is currently active and it has been making progress. And you can spot at this point, yesterday there was a fundamental event that saved the market, which was the FOMC news. So, however, the outcome of that news, the FOMC left the interest rates unchanged. So all these places is just a rally. There is a high liquidity around this point because traders are aiming, okay, what is going to be the outcome of FOMC? Is the interest rate is going to be increased? Is it going to be reduced? Or is it going to remain unchanged? So there's so much indecisiveness around this area, and that price was fluctuating really fast. So there is a high liquidity around this area, and however, you can see that it did touch our stop loss. This is our target stop loss for yesterday, and price went back to our entry, and because the analysis was on the right track, so it passes up. And now where we aim for our first target. And at this point, this particular trade has already hit target. So it has already hit target. So this is where we place our target as of yesterday. So the first target has been met. So and the ideal thing to do at this point. Now let's take a look at this area now. This is a swing low, this is a lower low here, and what happened? You can see the price actually broke it, but however, there was no clear confirmation that price has actually broke from this point. How? So it broke out, and there is a retracement back up beyond the breakout point, and price is currently moving in a sideways direction. So let's take a look at. I think I'm done with this trade. That's already hit target. So one of the rules rather, not number one, is do not be greedy. So once you've met your target, just take out the market. So Euro USD JPY currently has given me 190. Wow, so let me wait for it to hit 200. Okay, yeah, $100. Okay, market. Nice. Come on, broker. Don't do it to me. All right. Yep. We have our profit there, $200 taking on USD. So far we're done with this. Let's just wait for how the market is going to play out. So, and for Euro USD is still active. So we're aiming for a target here, and yeah, it's making progress. It's making progress. So Let's take a look at some few pairs. You can see if there is any opportunity for us to make an analysis on um, just like the tradition. I like starting off from the day, yeah, to get a sense of direction of the trade. Okay, now let's take a look at US Euro, AUD, Australian dollar. Yeah, Australian dollar. What does Australian dollar has in store for us today? And okay, yeah. First off, step one, using the RSI period 14. Let's look, is it above 50 or is it below 50? If you watch my previous video, I've explained how to reach this RSI period 14. So now currently, um, our RSI period 14 is below level 50. That's 44, which indicates a bearish trend. And so far, let's apply our trend line. We can see the market has actually been forming swing lows. So here is a trend here. You can see that market has actually been moving towards the downside, overall downside. So, and at this point, we notice, okay, somehow there is a breakout. There's a breakout from this trend. However, before, yeah, there's a breakout at this particular point here. So I'm just going to draw a line here. Okay, now, however, even though there is a breakout, there is no confirmation that this price is actually reversing. Why? Because, okay, now let's take a look at these points. This is where the trend starts from. I'm just going to label this one, right? Then label this two, and I'm going to take this point and label it 3. Now, the reason why I'm taking this point is that these are points of intersection with the trend line I drew. So you can see that points A, point 1, point 2, and point 3. 3, wait. I'm just going to label this 3, right? So I have my points 1, point 2, and point 3. These are points of intersection on the trend line. So now we notice that there is a breakout here at this point. Breakout from the trend line, not here from this one. So now, how do you know that if this is a major, if this is a genuine breakout? First off, there's a rule that says that whenever there is a breakout, if it is a bearish breakout, you wait for the next candlestick that has to form that will give a confirmation of that breakout has to be a bullish candlestick. And if it is a bearish breakout, the next candlestick after the breakout candle has to close bearish. So in this case now, though we have a breakout, yeah, this is a breakout, bullish candle. Now, what do you see? We take a look at this, we see that our next candle after the breakout candle is bearish. So this shows no indication. This doesn't give us a confirmation that this is a breakout. This might be a fake breakout. And also note that this is a previous high that this is a previous lower high that the market has formed. Now, looking at this line, you can see that price has not even broken out of this zone. Price has not broken out of this zone. So there is no clear confirmation that this is a breakout. This might just be a minor retracement, and for market to continue towards the downside. So let me just going to highlight this point for you to get a focus of what I'm trying to say. Now this is it. This is the point. So at this area now, before you this particular pair will give a confirmation of this breakout, price has to break out from this zone entirely with the bearish candlestick closing either from an impassive move and with another bullish candle closing above this region with another bullish candle confirmation. So giving the confirmation that yes, price is reversing towards the upside. So I'm just going to delete this. We don't need it. Yep, we don't need this too. We don't delete these numbers. This too. All right. So now we have our overall trend line on the daily time frame is telling us that the market is a downward, is a bullish market. And also our RSI below level 50 is also telling that this is a bearish market. So what we are going to be looking at, what our focus for today is going for the day, is going to be on looking out for bearish signals. So let's move further down to our 4 hours time frame. Now let's see our trend line. So just like you can see the intersection, you can see point 1, point 2, point 3. So you can see that the trend line also aligns on 4 hours time frame. This is step 2 when making your analysis. Whenever you have a trend, you draw your trend line, you go to a lower time frame. If the price aligns with the trend line, then you know that this gives you an extra confirmation that you're doing the right thing. So now we have, let's see what 4 hours has in stock. On daily, there is no confirmation, there's no reversal confirmation towards the upside. Now let's see if there is any form of reversal confirmation for a bullish movement on 4 hours. Now on 4 hours, we can see that there is also a breakout here. Yep, there's a breakout at this point. I'm just going to draw this trend line here. Yeah, and what happened after the breakout? Come on. All right. After the breakout, this is a breakout point at this point. So we can see that after the breakout, there is a bullish confirmation telling you that price has actually broken out from this point. And also, this there is a high. This is a previous high that was formed. Previous high that was formed, and however it was broken at this point, which is also a good confirmation that price is actually reversing. Then afterwards there is a retracement back into the breakout point, back into the breakout point. If I'm to take this, if I'm on this chart as well, when this move happened, some would likely take this trade and this trade, however, and they will still make their profit. But the ideal point of entry should be here, because for some time I've noticed that whenever there is a breakout from a trend, price actually goes back down to retest the previous low that led to the breakout if it is a bullish breakout. And for a bearish breakout, whenever there is a breakout from a trend, price always go back. Not most times, not always, but 80% of the time, price goes back down to retest the previous high leading to the breakout. That's for a bearish breakout. While for the bullish breakout, price always go back to retest the previous low leading to the breakout. So if I'm to take this trade, How will my entry, if I'm to take a buy trade, using these 4 hours as a means of confirmation, reversal confirmation towards the bullish side. So this is where I will place my entry, this green zone, because this is a previous low that led to the breakout. Let me show you something. Okay, this is a high, this is a low, and after this low, this is a break, this is a low that connects. This is the low that connects to the breakout, that led to the breakout. So there's every tendency that after giving second confirmation, break out from the previous high that was formed, lower high that was formed, break out from the trend line. This is the second, and then price is expected to bounce back into this zone for entry. Now, if I'm taking this trade, I will place my entry here. This is where I'm looking forward to place my entry. And note, this is a 4 hours movement. This analysis is where our overall trend for the day is bearish, telling us that whatever we're looking at for today on Australian dollar should be a bearish, that's sell. However, 4 hours is a long time frame. So before price gets into this place, we can be selling on a lower time frame, but I will apply my stop, my limit, order limit at this point. Now here is the price. This is a 50% entry point for this particular. So at 0.61727, this is where I will apply I'm expecting the Australian dollar to sell back into before I'm going to take a buy trade using 4 hours as a confirmation. So now, and my possible targets will be at this point, the previous high that was formed, which is this place. Yep. So my targets will be here for a bullish move. Please don't get it confused. 4 hours is a long time frame. So this is a pending order. This is a pending order. We're going to be looking out for a bearish signal on a lower time frame, because 4 hours is a longer time frame. It will take a while before this is going to play out. So our main focus is to look for a sell on this particular pair for today. Now, before this is going to play out, probably in the next, probably tomorrow or Friday, this price might have gotten to this place. And you can imagine if you're looking for a sell entry and we're selling towards the point and exiting at this point, whatever we're doing, once we're selling this market, which our target should be around this range so that we can follow the market towards the upside. And now this signal is based on a 4-hour time frame. 4 hour time frame. Now I'm just going to input my text here. So this is my target. Yep, this is my entry. Entry. Let me edit this. This should be entry zone. My entry zone, because it's not a definite price. Entry zone. Now the green zone is the entry zone with a 50% entry level of 0.16727. So this is where I'm likely to place my buy limit for this particular trade. Now, and my stop loss, it is very, very important to use your stop loss. My stop loss, ID stop loss should be here. Just a few pips below, yeah, just a few pips below the previous low that was formed. That's the lowest point. Stop loss. So now let's take a look. What is our risk reward ratio for this particular trade now? Let's calculate our risk reward and see. Okay, if we're taking an entry from this point, we're aiming for a target, an increase of 2.39%. That's 147 pips. 147 pips. Now, and our stop loss level decline is 0.70%. So that's like 3:1. That's like a probably 3:1. Let me see again. 200 and 150, 147 pips. Let's just say 150 pips. Yeah, 150 pips profit target with a stop loss of 44 pips. That's 3:1. And you can see that this particular trade is worth taking. It's worth taking. Yep. So this is the analysis on 4 hours. Pending order. Note, pending order. This is a pending order. So you can set your pending order. Stop loss. If you're looking for a stop loss, let me just draw this level, the stop loss, apply this. Your stop loss should just be below few pips, probably 1 to 5, 1 to 2 pips below the previous low. And that's 0.61310. Take profit 0.63 0.6323, and entry point should not exceed this point. Now your entry, you can either take an optimal entry from here, which is 0.61823, or you can take a 50% entry move at this point, that's 0.61722. So now this is the entry zone. This green zone is the entry zone. Now we're looking out for a sell signal for the day. However, the 4 hours present us with an opportunity to predict the future move for Australian dollar on 4 hours. And this particular what's it called setup is expected to happen in the next 2 days, probably next week. Yep, but just take note of it. So we have our first signal for the day, for the week. This should be a signal for the week rather. So let's see if we're going to have a signal for the day. Let's move to 1 hour time frame. What is 1 hour saying? So for 1 hour, yep. So 1 hour, you can see that price has broken. There is a rally up. You can see that there is a rally up, right? And then we have a downward movement which broke. This is the lowest, this is the previous lower low that was formed. Note, we are focusing on this area now. I think this is a bit getting crowdy. Let me try to clear some things here to give us a good okay. Now we're focusing on this particular area now. Let me just for sake of focus, I'm going to change this. Um, yep, I'll change this to black. Okay, now where our point of interest is from here. It's within this box. Everything we're looking at for is within this box. So now we can see the prices. If you're the kind of person that like art, so you can visualize something like this. You see, what shape does this look like? This is a V shape, right? We have a pyramid here, pyramid, and so far you can see price is actually respecting it. So, and we have an upward movement. This is the previous low. Price came higher and broke the previous low, which is at this point, right? At this point, price broke this previous low. We buy an impassive move. This is a candlestick that broke that particular low. Impassive move. And from this point now, we have an FVG at this point. The value fair gap from here to this point here. And we can see price at this particular, for a fair value gap to be valid, it has to be unmitigated. And what we mean by unmitigated is that it has to remain untouched. If it's going to be touched, that means it should be the first time that it's going to be. And from here we can see, oh my, come on, shut up. Um, from here, so we can see that um when you have a poultry farm just behind your house, that's what you have to deal with every day. Sorry guys. So we this is an FVG around this point. I'm just going to highlight this point here. Not to we have an FVG here. So and yes, you can see that this particular FVG has been mitigated. So that price has entered this. So this FVG has been invalidated. So now next we'll look out for what happens next. After breaking the previous low, there's a break in structure. That's a break in structure. After breaking in structure, it keeps forming a swing low, swing low, swing lows. And at this point, this is our previous breakout point, that is resistance. And price came and actually broke from it. This is a breakout from it. Price of further shoots back down. So what we're actually looking out for is that clearly we know that price is forming a pattern here, which is a V pattern. So at this point, and it has been forming swing highs and swing lows in the downside direction. So focus of entry or my method of entry, I'm just going to look for an FVG point. So here I have an FVG, right? Fair value gap. This is an FVG. Now, but at this FVG, I have a strong resistance which happens to be turning into support at this point. So now, unless price break further below and returns back to this point, that's when I'll be able to be confident to take this trade heading back to this downside. Now, remember, this is an analysis, not a signal. So I am expecting price to go below this point. Below this point. Now, let me just apply this. Now, as you can see, this is what I'm expecting. This is a roadmap. On 1 hour time frame, this is what I'm expecting. Unless price breaks below this, price breaks this below this point and retreats back up to this FVG. That's the only point where I'll be taking this trade. Without price breaking further below this point and retreating back here to the entry zone, I'm not taking this trade. So I won't recommend you do that also. This is analysis. So this is a condition for this particular signal to play out. There's a condition attached to this particular signal. So you wait for price to hit, then go back. So thank you guys. This wraps up the analysis for today on AUD USD. So let's look at and see how the market plays out. I remain RFX. Thanks you for watching, and do hit the subscribe button and turn on the alert so that you won't miss out from any of my videos. Wish you a blue trading day.